We're diving straight into the role of the State Insurance Commissioner for the national portion of the life insurance exam. This figure is essentially the chief regulatory officer of the insurance world. And the most important thing to remember for your exam is that they do not make the laws. Laws are passed by the state legislature, but the commissioner is the person who enforces them and creates the specific rules and regulations to carry out those laws. This distinction is a frequent trap on the national exam, where they might ask if the commissioner has the power to pass legislation, and the answer is always no. Think of the commissioner as the referee of a game who ensures everyone follows the rulebook, but did not write the rules himself. The commissioner has broad powers to issue licenses to both individuals like you and to insurance companies, which are referred to as certificates of authority. Without these, no business can be transacted. They also have the authority to examine the financial records of every insurer operating in the state, regardless of whether they are domestic, foreign, or alien companies. You will likely see a question about how often this happens, and while it varies by state, the national standard often involves a physical examination at least once every 5 years to ensure the company remains solvent. This is done to verify that the insurer has enough money in reserves to pay future claims. If the commissioner finds an insurer is struggling financially, they have the legal authority to step in and take over the company for rehabilitation or liquidation to protect policyholders from a total loss. When it comes to enforcement, the commissioner can conduct investigations and hold hearings if they suspect an agent or company has violated insurance code. A common exam point is the notice of hearing. Usually, the commissioner must provide a specific number of days of notice before a hearing takes place. If they find evidence of wrongdoing, they can issue a cease and desist order. This is a common exam term you must know, which essentially means stop what you are doing right now. If an agent ignores this order or continues the unfair practice, the commissioner can impose heavy fines, suspend your license, or revoke it entirely. It is vital to understand that while the commissioner can levy civil penalties and administrative fines, they do not have the power to sentence someone to jail. If a crime like embezzlement or major fraud has been committed, they must refer that case to the Attorney General or local law enforcement. Another major area tested is policy and rate regulation. The commissioner reviews the policy forms and the rates that companies want to charge before they can be used in the market. The exam wants you to know that the primary goal here is to ensure that rates are not excessive, inadequate, or unfairly discriminatory. They are not looking to find the absolute lowest price for consumers, but rather a fair price that ensures the company can actually stay in business to pay out claims when the time comes. They also look at policy language to ensure it is not misleading or deceptive to the average person. To keep these powers straight in your head, remember the mnemonic RIPE, which stands for Reviewing Policies, Investigating Complaints, Penalizing Violators, and Examining Financial Records. If you see a question asking about the commissioner's primary purpose, the answer is almost always the protection of the public interest. They are the shield between the consumer and the insurance corporations. Watch out for questions that suggest the commissioner can change the state insurance code on their own or that they work for the federal government. Insurance is regulated at the state level under the McCarran-Ferguson Act. If you remember that the commissioner is an administrator and an enforcer rather than a legislator, you will navigate these questions with ease.